So guys, in today's session, we're going to talk about penny stocks. So penny stocks, as many of you know, they are very, very popular among retail investors, right? Because they are very cheap and the potential upside is very high. And the craze for penny stock is so much that there are companies, that there are YouTube channels, Telegram channels that are completely dedicated to penny stocks. In fact, if you Google search penny stocks, you will see a lot of brokers who will come up with their own recommendation of penny stocks. And in case you're wondering what some of these penny stocks look like, well, I'm sure you would have heard some of these guys: Yes Bank, Suzlon, South Indian Bank, etc. So in this session, we're going to talk all about penny stocks, right? So we'll discuss what are penny stocks, what are the advantages of investing in penny stocks, what are the disadvantages or risks of investing in penny stocks, and I will end up with my own recommendation of what to do when it comes to investing in penny stocks. All right, so let's get started. So what are penny stocks? So the word penny comes from the US, right? So just like in India, we have rupee and paisa. In the same way, US has dollars and pennies. So the word penny is used to describe something cheap. So penny stocks are nothing but stocks that trade at a very low price. Now the exact definition of a penny stock can vary from country to country. So in US, shares that typically trade below $5 per share, they are considered to be penny stock. In India, it's not very cut and dry. Some people believe that stocks that are trading below 100 rupees, they should be classified as penny stocks. Whereas in my experience, I would say that the price below 50 will be more appropriate when it comes to identifying penny stocks. So what are the advantages of investing in penny stock, right? So the number one thing is that they are very cheap. That's the most important reason why investors are attracted to penny stocks, because here is what people believe, right? That when I'm going to buy, let's say, a stock of Infosys or Reliance with 1 lakh rupees or 2 lakh rupees, I will get a few hundred shares at most, right? But if I'm buying a share of a penny stock at 5 rupees or 10 rupees, with the same capital, I can buy thousands of shares. So that is one of the biggest attraction for small investors. The second reason why people like to explore penny stocks is because they believe that the room for growth in that stock is very high, right? So the general perception is that penny stocks are already trading at a very low price, let's say 2 rupees, 5 rupees, 3 rupees. So how much more can they fall? A 3 rupees stock, for example, can only go down to zero, right? But on the upside, the 3 rupees stock can go to 10 rupees, 20 rupees, 50 rupees, or even 100 rupees. In fact, a very famous example of a penny stock is that of Titan. So some of you might be aware that Titan at one point of time back in 2001 was trading at a price of 1.5 rupees, right? 1.5 rupees. And today that stock is trading at 3,000 rupees. So in other words, if you would have invested 1 lakh rupees in Titan at that point of time, that 1 lakh rupees would have been converted to 30 crore rupees, right? 30 crore rupees. I mean, that kind of again cannot be matched by any other investment vehicle that I can think of. The third reason why some people like to invest or trade in penny stocks is because of the volatile nature of it, right? So sometimes people believe that these stocks are a lot volatile, so they want to take advantage of quick moves. So a big stock, for example, will not make a move of 20%, 30% in a matter of few weeks, but that can easily happen in a penny stock. So that's the reason why a lot of traders are also attracted towards penny stocks. Now let's talk about the disadvantages or the risks of investing and trading in penny stocks, right? So the number one thing which you need to remember is that most penny stocks are junk stocks, right? So the majority of these companies that have these penny stocks, either the stock will eventually go down to zero, or this company will go bankrupt. So the probability of finding a winning penny stock like that of Titan is very, very low. The second risk is that of low liquidity or trading volume. So what happens is that there is not a lot of activity that goes on in penny stocks. There are very few people who buy and sell these on a daily basis. So if you, for example, let's say bought thousands of shares of this one penny stock and you want to sell it, it will be very, very hard for you to sell it at a decent price, because the bid ask spread will force you to sell it at a much cheaper price. The third risk with penny stock is that there is very limited data or information available about these companies, right? Because most of these companies are very small and they don't comply a lot of times with the regulations of SEBI or the stock exchanges. So any information regarding their cash flow statement or debt to equity ratio or the yearly revenue and profitability, it's very, very hard to find. And even if, let's say, you have the data, it's hard to say whether the data is reliable or not, right? That's a big problem with penny stocks. But the last and probably the most important risk in trading in penny stocks is that of potential scams. Right? So what happens is that because penny stocks are so cheap and there is so little trading volume, they're always very vulnerable for scams, right? And one of the very popular scams that goes on in the stock market in this penny stocks is called pump and dump scheme. And in this scheme, the price of a stock is artificially inflated to attract investors. And once the stock reaches a certain level, all these shares are dumped, causing the stock to fall like a rock, right? A lot of investors lose a lot of money every year because of these scams, right? So let me conclude with my own recommendation of what you should do with penny stocks. So in my opinion, buying a penny stock is like buying a lottery ticket. Buying them can be fun, it's very exciting, but the odds of winning are extremely low, right? You can get lucky once in a while, but in the long run, you will lose money. Therefore, if you are a serious investor, right, and you are thinking about investing from a serious long-term perspective, then you should absolutely positively stay away from penny stocks and focus on investing either through mutual funds or invest in well-established companies with a solid business model. Because remember, investing need not be fun. It just has to be profitable.